Sounds great. It's been a pretty wild ride this year so far. The market for real estate here in Seattle has kept us all on our toes. First quarter of the year was absolute gangbusters. We were seeing most of our sellers and just market-wide, multiple offers, escalated prices in the six figures were not uncommon. We saw some homes that were selling, $400,000 or $500,000 over asking. There was even stories in Bellevue of a couple of different homes that had sold for $1 million over asking. So it was just a really robust seller's market where buyers were just tripping over themselves to pay premiums to get homes. And that has shifted dramatically in the last really 60 days or so. The Federal Reserve has been very dedicated to getting a handle on inflation. And so we've seen the Fed funds rate increased, I believe, 4 times now this year. The last 2 rate hikes were at 75 basis points. The first one being in the middle of June. And that really sent shockwaves through the market. So what happened was that was an unexpected increase. The mortgage market responded accordingly. And so rates jumped up overnight to over 6% for a 30-year fixed mortgage. So we went from mortgages in the 3% range in the late winter, early spring to the 6% range by midsummer. So naturally that just eroded buyers' purchasing power and really pumped the brakes on the overall marketplace. So between mid-June and about the second week of July, we saw activity just sort of fall off a cliff. Inventory started to climb, buyer demand really diminished. But over the last 3 weeks or so, we've seen things balance out a little bit. So somewhat counterintuitively, mortgage rates actually came back down a skosh after this last interest rate hike, which was at the July 25th, 26th Fed meeting. They raised the Fed funds rate another 75 basis points, but the 10-year Treasury, which is really what mortgage rates follow, dropped, and therefore mortgage rates dropped. And so we were back into the low 5s, even down towards 5, and that has kind of kicked activity up a bit. And the good news for buyers is there's just been a lot more inventory, a lot more options. Again, mortgage rates coming back down kind of increases purchasing power, and you're seeing prices really soften. So I wouldn't say we're seeing depreciation, but the rampant appreciation that we saw in the first quarter in many markets has really been eroded, because that was driven by mostly price escalation through competing offers. So anyway, it's a pretty volatile and somewhat unpredictable time, but we are seeing sellers that are out there in the market and they're pricing accordingly, and their homes are selling, and we are seeing buyers that are capitalizing on the market conditions and getting good prices on homes that they wouldn't have gotten just 3 months ago. So it's certainly an interesting time to be in Seattle real estate. And as always, we're here to help buyers and sellers navigate this market. And if you have any questions whatsoever, please reach out to me or anyone on our team. We'd be delighted to speak with you.